As a business owner, cash flow is almost a constant headache that we always have to manage closely. And a big part of that is often getting your customers to pay you on time. Now, when I worked as a finance director, my team collected nearly £20 million per month. Around 75% of the team's work was very proactive, and it was focused on the customer before they had even made a purchase or their invoice became overdue. So I'm going to run you through my top tips for how you can manage the credit control processes in your company to make sure that your customers are paying you on time and you can avoid any issues that late payments cause you from a cash flow perspective. So as an accountant, we specifically support small limited companies in the UK who are owner managed. So if that's you, don't forget to hit the subscribe button so that you can get notified whenever we release more content like this that helps you to increase your profits, improve your cash flow and grow your business. So with credit control, proactivity is key, and if you lay good foundations, then you will find that you can dramatically reduce the amount of invoices that ever become overdue. And this, of course, starts right at the very beginning with your customer, and you must get to know your customer. So aside from the obvious information like collecting accurate email addresses and contact information from your potential customers, there is also lots of agencies out there such as CreditSafe or Dun & Bradstreet where you can run a business credit report about your customer. Now, the information available about businesses when you run a credit check is not the same as personal information, particularly for small businesses. It's likely to be based heavily on their annual accounts information that's published at Companies House. But nonetheless, it's still worth having a look. Sometimes you can find out information such as their turnover, what value assets they've got, what debts they've got for other companies, but also more importantly, you can see if they've ever had any previous payment issues in the past that have resulted in court action. Now, the next thing you need to do is to negotiate terms with your customer. Now, there are two things that you need to negotiate with your customer at this stage. The payment terms is how long you want to give your customer to pay you. And typically, if you're a B2B seller, then the most common payment terms in the UK are 30 days end of month. However, just because that's the most common, that doesn't mean that's what you need to give. I would recommend researching your competitors to see what they give, and also just have a conversation with your customer. If you can use credit control as a selling point for your customer, then you are more likely to win that customer if you're in a competitive situation and your competitor might only be offering them 30 days, but you can offer them 60 days. So you need to agree the payment terms of how long the customer has to pay you, but you also need to agree the credit limit. Now, the credit limit is how much they can have on account at any one time. But one of the good things about using the credit agencies is that they will actually make a recommended credit limit and payment terms for you. Again, this is where knowing your customer is really critical, because there's no point giving your customer a £5,000 credit limit if their first order with you is going to be £10,000. So you've got to be realistic and practical and make sure that you're not putting your customer off by offering them silly numbers that don't work for them. Now, the next thing is having good terms and conditions in place. Now, there are three things that I would always recommend are in your terms and conditions to protect your business from late payment or failed payment. The first would be about transfer of ownership of goods. Now, what you are allowed to do as a UK business is say that the goods belong to you until payment has been made in full. So even if the goods have been delivered to your customer, should the customer fail to pay you, you have a right to go into that customer's business and retrieve the goods, subject to certain conditions. Now, in reality, you can't always get your goods back, especially if they've been sold on to a further customer or maybe used in production or something like that. But I've worked with many businesses where we put this clause in place and we have enacted it and gone into the business and retrieved our goods, which means we can limit our liability should that company fail to pay us. The second clause is around failed payment partway through projects or partway through delivery. Now, if you're just delivering one product at a time, then this probably doesn't apply to you. But if you are a more complex business that has long contracts, maybe you work on projects or you deliver multiple products as part of a big order, then this is really crucial. You want to be able to say that you have the right to stop any work if the customer fails to pay you, and that you are not liable for any losses that your customer may incur as a result of that. And finally, the next thing that I always recommend you put in your terms and conditions is around interest. Now, it's actually not very well known in the UK that there are legal terms protecting businesses around payments. And as a business, you have a right to charge interest to your customers if they fail to pay you. So in reality, you're not going to want to default to this as the standard thing to do every single time. But this is really good practice to have in your terms and conditions, because should you have a customer that you know is not going to do any business with you in future, then I would say that that is when you enact this clause of charging interest on any late payments. That's the building blocks that you can apply of the things that you need to do before you think about making a sale to the customer. So that's know your customer as well as possible, agree payment terms with them and a credit limit, and make sure that you confirm that in writing to them. And finally, make sure that you are protected by having good terms and conditions, and that you share this with your customer at the point of order too. But once the customer has made a sale from you, what can you do to make sure that you can speed up that process and avoid any invoices becoming overdue in the first place? Well, it sounds obvious, but send the invoice at the earliest possible date that has been agreed with the customer. The amount of small businesses that I know that will raise their invoices several days after the end of the month and then backdate them. So always get those invoices out as promptly as possible. This gives your customer maximum time to raise any queries with you and to let you know if anything's wrong. Now, next is the most crucial step that I would suggest that every business should be doing with their credit control processes. And when I worked as a finance director, this is where most of my team's time was spent. Now, around 10 to 14 days after you've issued the invoice to your customer, my suggestion is that you pick up the phone or drop your customer an email just as a courtesy call. Make sure that they've received the invoice and to see if there's any queries or any issues that they can foresee relating to payment. The most common queries that you're likely to get here is that the customer will tell you that they simply haven't received the invoice, or they will ask for maybe proof of delivery, or that the purchase order reference isn't correct, something like that. And all of those queries will come out at this stage. And that's incredibly valuable because that allows you to resolve that query before that invoice becomes overdue. If the customer at this stage does say to you that there's absolutely nothing wrong with the invoice and that it will be paid on the next payment run, then I always recommend asking for what's known as a promised payment date. And this just simply tells you the date that they are expecting to pay the invoice to you. What do you do if your customer doesn't pay you either on the promised payment date or just doesn't pay you at all? Well, firstly, I always recommend taking a soft approach with your customers. You want to support your customer and build long-term relationships with them. I don't approve of these black and white rules where if a customer doesn't pay you, they go on stop and you get hard and send tough emails to your customer. Generally, I find that all that does is turn people off to your business, and if they can find a more softer competitor to you who's more likely to work with them and be a bit flexible, then they tend to go and do that in the long term. So the soft approach, but you must be firm, you must be consistent, and you must have good processes. So if a customer doesn't pay you and you have a promised payment date, then I would suggest waiting a couple of days. Because of the UK banking system, most businesses use BACS payments, and these can take 3 days to clear. But if it's gone more than 3 days that invoice is overdue and the customer hasn't paid you, I always recommend picking up the phone as soon as possible. Again, at this stage, it's a soft approach. You're wanting to just check if there are any issues at all, any help that they need. Come from a customer service perspective, do not come from a debt chasing perspective. Now, normally, I find, particularly if you are selling to big businesses, that often they have quite inflexible processes. So they'll do payment runs normally once or twice a month. And if your invoice wasn't approved on time, maybe somebody was on holiday or something like that, then you will just simply fall onto the next payment run. It doesn't mean there is any issue. And what's really important when you have a customer that hasn't paid you is you're looking to establish whether the customer hasn't paid you because there's some sort of error with the invoice or query that needs resolving, or some sort of process that just has fallen apart, and therefore they are going to pay you, they're just going to pay you late, versus whether the customer isn't paying you because they don't have the ability to pay you. So it's always really critical that you can identify the risk. Is the risk late payment or is the risk no payment? And those two things you would deal with slightly different. If the risk is no payment at all, then I recommend that you put the customer on stop immediately. Unfortunately, you don't want to expose yourself to any more risk of sending any more products or services to this customer if they can't pay you. But in reality, most of the reasons why a business doesn't pay you is just simply because they're going to be paying you late rather than because they can't pay you whatsoever. And therefore, whilst it can be frustrating, I recommend just working with this customer and putting gentle pressure on them to get the payment as soon as possible. And finally, if you do have a customer that doesn't pay you, then you do always have the option of resorting to a small claims court. Now, this process can be used for debts up to £10,000 and can be used against any individual or a business in the UK. And the process is actually quite simple. You need to fill out an online form and provide the evidence of the goods being delivered or the service being provided in the first place, along with any communication that you've had with the customer. It is best practice that you issue a reminder letter, a warning letter, and then a final letter that says, if you do not pay us by X date, we will begin legal proceedings. If you don't have all of this in place, then there is a chance that the court will say that you didn't allow the customer sufficient time to pay. And what that means is that you just have to revert back to zero, issue the paperwork to the customer, and then if they still haven't paid you, you would have to reinstate the court claim and begin the process again. So again, you can get templates for all of these letters on my website. Just visit profitcashgrowth.com and go to the free resources section. And if you found this video helpful, don't forget to hit the subscribe button and get loads of free hints and tips from me, all about how to increase your profits, improve your cash flow, and grow your business.